I actually like the fact that this bull market isn't on anybody's radar, because I just assume Wall Street buy into the market later at much higher prices. They don't need to get in now. I want my clients to get in now. And the less competition, the better. I just want to get as much, gold mining stocks and silver mining stocks as I can. And the last thing I want is, Merrill Lynch and Goldman Sachs telling all their clients to buy, right? Because that's going to make it more expensive for my clients. So the longer they ignore this bull market, the better, as far as I'm concerned. Like, I'm in no hurry. I waited plenty of time for this, and I'm in no hurry to speed it up right now. But I do look at that as a positive sign that nobody's invested. The public, has no idea. You have one group of people that are still fixated on Bitcoin, and they're buying Bitcoin instead of gold. Although Bukele, I just read that he just put $50 million into gold. So maybe he's figuring out that Bitcoin is the wrong way to go. But, it's interesting that Bitcoin is barely up today, and Bitcoin is more than 15% below its peak priced in gold from 2021. So 4 years, Bitcoin's been losing value relative to gold, despite all the marketing hype surrounding Bitcoin. All the ETFs that were established, the NFTs, the Super Bowl ads, the celebrity endorsements, Donald Trump and the strategic Bitcoin reserve and the Bitcoin czar and making Bitcoin the capital of the world, right? All that pump, and they can't even get Bitcoin to go up. So what does that tell you? But what is going up is the one thing that's not getting any hype, and that's gold. And now silver, going up as well, but not into record territory. So these gold stocks, I think, are still extremely cheap. They could double again from here, and I don't think they'd be expensive, especially considering that if the gold stocks double from here, gold's going to be a lot higher. So it's like they still wouldn't have caught up to where they should be. So we got a long way to go into mining stocks. In fact, in April of this year, I kind of aggravated some of the guys at Schiff Gold because I put out this report that said the best way to buy gold, and it was to buy the gold mining stocks. And I was telling my clients for the first time not to buy gold. And gold was around 3,200, 3,300. And I said, look, I'm a gold bull. I love gold, but these gold stocks are so cheap that it doesn't make any sense to buy gold above ground. Just buy it while it's still in the ground because it's so cheap. And while gold went sideways for all those months, the gold stocks were soaring. And they're not as cheap as they were, obviously, but they're still very cheap. And I still think people should be buying gold stocks and gold now, and physical silver.
What do you make of this significant and rapid drop in the USD versus gold? And do you think governments will eventually be forced to reintroduce gold to the monetary system in one form or another?
Well, I think that is going to happen. I think it's pretty clear. If you look at the main buyers of gold the past couple of years, it's been foreign central banks. Why are they doing that? I think they're preparing to replace their dollars with gold. I think gold is going to become the primary reserve asset for central bank. And that's going to be a game changer for the United States because the world is not going to need our dollars anymore. Well, if they don't need our dollars, then how are we going to buy all the stuff that we need? Because we don't produce it. And how are we going to finance our debt? Because we've been relying on foreigners to finance that debt because they have the savings that we lack. So it's a big problem for the U.S. But I think from a monetary perspective, you're going to see, I think, people utilizing gold using the technology that exists today, whether it's on-chain with, tokenized versions of gold, or whether it's just through proprietary closed systems where, the custodian has the gold and just uses technology to allocate ownership digitally so that people can transact business, receive and make payments, send money and receive money using gold, right? Just like using PayPal or Venmo or any other, Zelle or any of these things, you can just use gold. You don't have to transfer your gold. If I wanted to buy something from you and you wanted me to pay you, a gram of gold for it, right? Whatever that is, 30, 40 bucks, whatever, right? I don't have to send you a little bit of gold in an envelope and mail it to you. If the gold is held in a custodian and I have it tokenized in my wallet, I can just email or text you the gram. And now the ownership of the gold goes from me to you. So now you own the gold, not me anymore. You've got it. It's in a vault. Now, if you want the gold, you can have them ship it to you. But why do that? Just hold on to the ownership receipt, because now if you want to buy something, you can pay with gold, because the guy that wants to sell you that, he wants gold too. Why would people prefer gold to dollars? Because gold holds its value. Why would I want dollars when I can have gold? It's like, why use the post office when I can send something by FedEx, right? The free market has provided me with a better alternative than the government, right? Why do people use Uber and Lyft? Because taxis are too expensive. Why are taxis expensive? Because the government provides the licenses and regulates them, and so they're expensive. The free market alternative is, well, I'll just call an Uber, right? So the equivalent of an Uber in the monetary system is gold, right? Gold is the free market's money. Fiat is government money, and it's lousy because it loses its value. The longer you hold it, the less it's worth. The opposite is true of gold. The longer you hold your gold, the more it's worth. I think this cycle really just got started after that consolidation, but I think the leg started in 2024 when we broke above 2,000, and we quietly moved from 2,000 to 3,000 and nobody noticed it. In fact, when gold was hanging out at 2,000, a lot of analysts put sell recommendations on Newmont and Barrick because they thought that gold had topped and they didn't see any upside. And then I think when Trump won, a lot of people expected the gold to fall because the economy was going to boom and Trump was going to do all this great stuff about shrinking the deficit, making America great again. But now it's becoming more obvious that none of that was true. But I think this is a new leg. We spent really over 10 years. Remember, the first leg of the bull market was 2001 to 2011. Gold went from under 300 to 1,900. So it increased by sixfold, right? Then it really went sideways from 2011 to 2024. Gold traded between 2,000 and maybe 1,500, 1,700. I mean, it initially pulled back to 1,000. It got to 1,050 in 2015. So it held 1,000, went back up, but only made a new high briefly during the 2020 COVID crisis. It poked its head above 2,000, but then, it got chopped off and it went back down. But that's a huge base that we built around 2,000 as a floor now, because it was resistance. It was the ceiling. Now it's the support. And now we're just starting another leg, which I think will be at least symmetrical to the prior leg. So we had the move from under 300 to 1,900 consolidation. That was a sixfold increase. If you assume we go up sixfold from 2,000, that's $12,000 gold. So I kind of, at a minimum, I think that that's where we're headed. But if we end up having a dollar crisis and a U.S. sovereign debt crisis, we can go a lot higher than that. And I think that there's a good chance that that's going to happen. You asked me what's driving this. It is the monetary and fiscal policy of the United States, which are disasters. And in fact, following the weak jobs report that we got today, and by the way, the jobs market has never been this weak outside of a recession. In fact, the last two times you had a labor market as weak as the one we got right now, it was the Great Recession of 2008, 2009 with the financial crisis, or 2020, as we were shutting the whole economy down because of COVID. So, the Fed has been mischaracterizing this labor market. Powell kept saying, we have a really strong labor market. We have a really strong market. He was wrong the entire time. We have a weak labor market. And you would even see how much weaker it was if we had honest statistics. But we don't. But even with the statistics we have, we had outright job decline in June. We lost 13,000 jobs in June. The August number was just plus 22,000. Manufacturing lost 13,000. And the U6 unemployment rate, which is more relevant than the headline rate of 4.3, is 8.1. So we've got rising unemployment and inflation. The Fed said that the labor market was strong, but inflation is weak. They got it backwards. The labor market is weak. Inflation is strong. And I think that's really what's helping to drive the move in gold now and down in the dollar.
And let's get into the heart of this. The reason this bull market in gold and silver is unlike any other we've had in our lifetimes is that it's not just about metals going up. It's about currencies falling apart. And when I say currencies, I don't just mean the US dollar. I mean the euro, the yen, the pound, all of them. The whole fiat system is rotten. You can see it in the numbers. The yen is at 35-year lows. The euro is basically just a weaker version of the dollar with a fancier accent. The British pound has lost 99% of its purchasing power since the creation of the Bank of England. And yet, every time gold rallies, the headlines say, "Gold rises on inflation fears." Number. Gold rises because paper money falls. That's the story, but you'll never hear it on CNBC because they need to keep people parked in stocks and bonds. Now think about how absurd this is. The US government is running trillion-dollar quarterly borrowing sprees. Interest on the debt just crossed $1 trillion annually, more than we spend on defense, more than Social Security. And we're supposed to believe this is fine? Treasury officials go on TV and act like it's just another line item in the budget. If this were a household, you'd be bankrupt or in jail. If you tried to run your finances like the US Treasury, maxing out credit cards and taking out payday loans to cover the minimum payments, you wouldn't last a month. But because it's the government, they get away with it until they don't. And here's the catch. We've reached the point where interest rates can't rise without blowing up the system, and they can't fall without unleashing inflation. That's what I call the Fed's corner. Jerome Powell is boxed in tighter than a New York studio apartment. If he raises rates, the Treasury can't pay. If he cuts rates, inflation rips higher. Either way, the dollar loses. That's why gold wins. You want to know how absurd this gets? Let's take a look at some recent data. The trade deficit in July hit $103 billion, one of the worst ever. Exports down, imports up, despite tariffs. So much for tariffs fixing the trade balance. The budget deficit? Forget about it. We're looking at $2 trillion plus annually, and that's during what they call good times. Imagine what happens in a recession. The twin deficits, budget and trade, are both widening, and that's the death knell for the dollar. But what's really fascinating is how the gold miners are trading. Look at the GDX and GDXJ, the ETFs for senior and junior miners. They've exploded higher this year, up 80%, 90% year to date. That's not retail money. That's institutions finally waking up. For years, the miners underperformed because nobody believed the gold rally would stick. Investors were afraid gold would crash, so they stayed away. But now they're buying even on days when gold is down. That's a huge shift. That tells you they've realized the gold bull is real. And here's the irony. Even after doubling, the mining stocks are still cheap. If you price them relative to gold, they're trading like gold is $1,800, but gold is almost $3,500. So these stocks have a lot of catching up to do. I'll say it again, buy the miners. You're buying gold in the ground at a discount. Now let's address Bitcoin again because I know people love to bring it up. I keep hearing, Peter, you're missing the boat. Bitcoin is digital gold. No, it's not. Bitcoin is a